What's your quick take off of this? So I thought it could be Goldilocks.
I think it is a very good number that certainly doesn't make anyone nervous at the central bank. And of course, the central bank has been talking about trade uncertainty as the major driver. This number is not an impediment to future rate cuts, and the trade uncertainty just picked up.
Kristina, your take.
Well, it's certainly lower than the average that we've seen over the last 6 months, but it makes sense given that we've seen some weakness in manufacturing, but we've seen strength on the consumer side, on the services side. So this makes an awful lot of sense and really has nothing to do with the next Fed's decision.
Kristina, I'm looking at the wage growth, 3.2%. It was good coming into this report, but is that enough when you hear threats of potential tariffs?
No. So what you're seeing is wage growth at 3.2% is still relatively tepid based on where we should be in this economic expansion. Just as by comparison, last month's Canada jobs report was at 3.8% wage growth. And one would argue that they don't necessarily have as robust an economy today as we do. So we need to get to that number or higher before the Fed really starts to worry about inflation.
What about labor force participation rate? It's either fallen or been stagnant for much of the year. We saw it bump up 0.1% to 63%. What does that tell us about?
Well, that's very encouraging because it's telling us that we get more people engaged and therefore there's less upward pressure on wages. And yes, the wage number came in just a tad heavier, but I'm very encouraged by the fact that the labor force also grew by close to 370,000. When you see that kind of an increase and the unemployment rate essentially being unchanged, it is encouraging that we are driving in people that were not engaged before.
People are coming in off the sidelines back into the job force. Do you think, though, that the biggest issue for employers right now is still finding skilled workers?
I think that's certainly a big issue in some industries. That, though, is very spotty. It depends on the industry and it depends on the region.
Anthony, it's still below trend. 164K is still below the recent trend. Do you think that just feeds the Fed narrative that, yes, the trade war is impacting the U.S. economy?
Well, I think that right now, I think it's premature to say just that the trade war is impacting the labor front. It is impacting the economy, no doubt, because we've seen business investment being very weak. We've seen business sentiment being very weak. But on the other side of the ledger, we see consumers pretty optimistic. That may change, however, when they start to see the tariffs coming down.
Yeah.
When you look at the pullback in payroll growth, it's been very sector specific. It looks like the manufacturing has bled over into construction and mining. We saw that come back a little bit, 16,000 manufacturing jobs this past month. What do you make of that? Not a rebound. We can't call that a rebound.
It's not a rebound, and I think that is very emblematic of what we're likely to see going forward, given that these trade wars persist. Manufacturing is going to continue to be under pressure.
I'm trying to get in the head of investors watching our platform right now. What do you think this means for the Federal Reserve? Are they likely to cut again in September based off of this report?
Again,
what else do you need to see?
Remember that the economy is doing okay and, in fact, does not justify rate cuts. The only reason I think the Federal Reserve cut, and I said that last month on your show, is because of the uncertainty out there. That is the major issue and catalyst for rate cuts. And we just saw that with the increase on the additional amount of Chinese goods coming into the country, that actually increases the level of trade uncertainty. So on the economy's front, I think that still we're in the same situation. I agree with Kristina as we were last month. But now with increased trade uncertainty, I think we have to put more rate cuts back on the table.
Yeah. And if you drill down, you've got retail losing 3,600 jobs. I would have to think that's only going to get worse if and when these tariffs do go into effect September 1st.
Well, absolutely, because a lot of those tariffs are on consumer goods or what is related to consumer goods. So we do have to worry about that. Although I think the bigger issue is that economic policy uncertainty, which really bleeds into business confidence. So when I'm asked what the biggest victim is of, for example, yesterday's announcement of more tariffs, while yes, consumers are going to feel some pain, I think the really big victim is just business confidence.
Kristina, what do you do after a report? I'm looking at futures, and the futures to me seem a little confused. And you have to almost attribute that to the Federal Reserve and what they said this week.
Oh, absolutely. There was an enormous amount of confusion around what Jay Powell said this week because it's so unusual to make this mid-cycle adjustment when there didn't seem to be any real reason other than trade was at in some respects comforting because it suggested, the U.S. economy is on solid footing, and that's really what we saw from the Fed announcement and everything they've said about the U.S. economy. But at the same time, it raises alarm bells about how worried they are about these trade wars.
But if you look at the futures, they're basically unchanged from before the report. So, Anthony, is this report really just a snoozer for investors today?
I think it's basically one where they have to digest the situation. You can call it a snoozer, I can call it they're just digesting, but it really doesn't change the status quo. Right after the trade uncertainty went out yesterday, one of the things that investors realized, it's going to mean slower economic growth because the star performer in the U.S. economy was the consumer. And now, as Kristina mentioned, we put all these tariffs on consumers. There is no way that we're going to see 4.3% growth in consumer spending moving forward. That's going to slow down. The manufacturing sector is already weaker because of the trade uncertainty and the weaker global demand. And now we're passing the baton of slower growth onto the consumer.
Are we looking at a peak in job growth a couple months ago? Look, we had 164K was slower than last month. You had down revisions to the prior 2 months. Is the peak? Are things just going to get worse in coming months because of the tariffs?
Well, I don't even think they're bad right now, so I'm not concerned because right now all you need is about 100,000 just to absorb the natural growth of the labor force on an average basis.
So 100K would be good.
100K is enough. And so if we're growing above that, and we are, and we may continue to grow at that pace above 100K for quite some time, even as the economy slides down, because right now, most businesses have more job openings than people that are available. So even if the economy slows down, that doesn't mean that we get a perfect shutdown. And to the extent that we see lower interest rates, that may give a little bit of a boost to the housing and the auto sector, and that may create some jobs there.
Do you think that what does this tell us about this expansion that we're in now, this 10-year expansion? Does this report still tell us that this is still a very resilient economy?
This is absolutely a resilient economy, and the wage growth number in particular tells us that this expansion has legs. I think the really big concern, the big unknown, of course, is trade wars, because to your point, that could have an impact going forward, not just on the consumer. I actually worry even more that companies will start having to defend profit margins, that we're already seeing this impact costs. And so how do you defend profit margins? Well, one way is to lay off workers. So we want to follow this situation closely because workers could be the victims of the tariff wars if they go on long enough. It's not just going to be business investment. It kind of extends out beyond that.
Anthony, give us a little GDP preview here. What would a 10% tariff in September mean for GDP over the next 2 quarters?
I think over the next 2 quarters, you're certainly going to see GDP being shaved off anywhere from 0.2%, maybe even a little bit more. We have to see how quickly the consumers actually get sort of spooked by the higher tariffs and whether or not these tariffs are sustainable. I think at this point, we don't know if this is a negotiation tactic or whether these tariffs are going to be remaining on the books for quite some time. So it's still unclear.
Well, getting back to wages, up 0.3% month over month, 3.2% is it year over year.
Yep.
Yes.
Do we think that that's going to be enough to start to have inflation turn the corner and it will start rising to the point where the Fed says, you know what, another interest rate cut isn't needed?
Not at this juncture. I think it has to get a significantly higher from here to really cause concerns about inflation. This is a pretty attractive number for this far into the expansion with such low unemployment.
It would be great. It would be great if there were no trade war. This report would be, I would imagine, sparking a rally on Wall Street.
That would be the Goldilocks environment. If we could get this jobs report with no trade issues.